Good morning or good afternoon, everyone. It's Unky. Whenever or wherever you're watching this video, thank you for taking the time out of your busy schedule to watch today's video. I hope everyone's having the best day or the best week of their life. If you found value and are excited about today's video, make sure to hit the subscribe button for more videos like this. Usually my videos are about investing, health, and life. Today's video is going to be about how to invest in renewables. Leave a comment below with what your favorite renewable stock is and why you're investing into this renewable energy stock. Let's try to hit 7,000 subscribers in 7 months. With all that out of the way, let's get into today's video and talk about renewables energy stocks. The first renewable stock we're going to talk about is First Solar Inc. FSLR, which is currently trading at 65.77. The PE ratio is 32.64. Market cap is $7 billion. The 1-year chart, it is down 13%. But the 5-year chart, it's up 78%. And when you look at the max chart, it's up 165%. Let's look at their finance. They are taking a beating right now with everything being down in their financial sheet. They did beat EPS. They missed revenue by 37%, which is really alarming. But this is the first renewable stock. Let's go on to the next one. The next stock we have is NextEra Energy, which is currently trading under ticker NEE, which is trading at 71.22. It does pay a nice dividends of 2.39%. The PE ratio is high, 96.69. Market cap is 139. It is down 4.33% year to date. The 5-year chart, it shows it's up 102%. The max chart, showing up it's up 3,332%. Number 3 on the list, we have Enphase Energy Inc. ENPH, which is also trading at a high PE right now of 144.98. Market cap is $22 billion. The 1-year chart, it's up 18.25%. The 5-year chart, it's up 23,268.06%. And the max chart, it's up 2,192%. Let's look at their financials. As you can see, their financials are doing really good. The only thing I'm concerned was the net change in cash, which is down 83%. The Q1, they did miss EPS by 46%, but the revenue is up 1.76%, and they beat earnings the last 3 quarters after that, or before that. Next, we have Vestas Wind Systems, ASADR, which is currently trading under ticker VWDRY. It's an OTC, so it's over the counter. It is down 0.67% of today. The 1-year, it is down 41%. The 5-year, it's up 22.96. The max, it's up only 9.97%. Let's look at their finance. As you can see, their finances are taking a hit. The EPS is down all these quarters. They did beat revenue these 2 quarters, but they did miss it in Q2 of 2021. Next stock we have is AMRC, currently trading at 55.44. It has a PE ratio of 38.41, which is lower than the ones we talked about before compared to those other stocks. It has a nice market cap of 2.87 billion. Let's look at the 1-year chart. It is up 6%. The 5-year chart's up 709%. The max chart, it's up 451%. Let's look at their finance. Net profit margin is also down 17%, but the net change in cash is up 21%. Cost of revenue is up 97%. They did beat earnings, and they beat it by a good amount in Q1 of 2022. They did miss revenue in Q3 of 2021. Solar Edge Technology Inc. SEDG. Solar Edge Technology currently trading at $256.81. It has a market cap of $14.22 billion. PE ratio is also high, 82.50. When you look at the 1 year chart, it is up 1.78%. It's up in the 5 years, it's been up 1,280.70%. In the max chart, it's up 1,118%. Let's look at their financials. And as you can see, their financials look amazing. The thing I really do love is it's up in net change in cash, which is up 432%. Net profit margin is down 31%. They did miss EPS the last 2 quarters, as you can see right down here. They did beat revenue. And then Q3 of 2021, they did miss revenue again. Next, we have Vestas Wind Systems, ASADR, which is currently trading at our ticker VWDRY. It's an OTC, so it's over the counter. It is down 0.67% of today. The 1 year, it is down 41%. The 5 year, it's up 22.96%. The max is up only 9.97%. Let's look at their finance. As you can see, their finances are taking a hit. The EPS is down all these quarters. They did beat revenue these 2 quarters, but they did miss it in Q2 of 2021. Next stock we have is AMRC, currently trading at 55.44. It has a PE ratio of 38.41, which is lower than the ones we talked about before compared to those other stocks. It has a nice market cap of $2.87 billion. Let's look at the 1 year chart. It is up 6%. The 5 year chart's up 709%. The max chart, it's up 451%. Let's look at their finance. Net profit margin is also down 17%, but the net change in cash is up 21%. Cost of revenue is up 97%. They did beat earnings, and they beat it by a good amount in Q1 of 2022. They did miss revenue in Q3 of 2021. STEM Inc., trading under the ticker STEM, STEM, currently trading at $7.59. The market cap for it is $1.17 billion. This is one of my favorite renewable energy stocks. And I'll tell you why in just a few minutes. But let's look at their financials. They probably are not profitable yet because, as you can see, I was correct. They're not profitable yet. It's a work in progress company. It's a growth company. It has a lot of potential, and you'll see why in just a few seconds. The net change in cash is alarming. It is down over 9,000% when it comes to that. It did miss earnings when you talk about EPS the last 2 quarters. It did beat revenue by 43%. And it did miss revenue in Q4 of 2021. In Q2 of 2021, it missed both. Let's go to their company website so you can see what they're about. The next stock we have for renewable energy stocks is Plug Energy Inc. Plug, PLUG, currently trading at $16.45. Market cap is $9.51 billion. Over the year, it is down 39%. Over the 5 years, it's up 765%. And the max, it's down 89%. Let's look at their finance. Their financial balance sheet looks horrible. Net profit margin is down. Net income is down. Operating income is also down. They didn't miss all the EPSs. They missed revenue in Q1 of 2022 and Q3 of 2021. And the last stock we're going to talk about today is Clearway Energy Inc. Class C. CWEN. Currently trading at $32.71. Market cap is $6.40 billion. PE ratio is really high, 239. It does pay a nice dividend of 4.32. But like I said, the PE ratio is alarming. Let's see how they did over the year. They're up 22%. Over the 5 years, it's up 78%. And over the all max, it's up 33.51%. Let's look at their financials. And as you can see, all their financials are down. They didn't even report EPS these 2 quarters right here. They missed revenue the last 3 quarters. The cost of revenue is up 16%.